Today, let's start off by looking at what the biggest investors are buying. Then we'll take a look at the current projections for the upcoming Fed cuts. Then we'll take a look at fear and greed, as well as the economic calendar. Then we'll get into the charts, as well as my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So some big investors went shopping on the most recent downturn, and let's take a look at what they bought. Starting off with Berkshire Hathaway, they started buying some of the three biggest U.S. home builders, Lennar, NRV, NVR, and Dr. Horton, which is interesting considering high interest rates are starting to beat down these companies. They're not going to be able to sell homes in the same way that they have been. So definitely an interesting move. And then they trimmed their Chevron position, bought some Occidental, trimmed these other positions here. Definitely interesting. The Bill and Melinda Gates Foundation bought more Berkshire Hathaway, which is also interesting considering that he is very anti-oil and gas, but he does own it indirectly through Berkshire Hathaway, who owns quite a bit of energy products. They also bought some Anheuser-Busch in their most recent downturn. Fairly interesting. There was also some articles about how the original owner of Anheuser-Busch might be looking to buy that company, which could be a nice little arbitrage play if that ends up happening. We also have the Children's Investment Fund buying some Thermo Fisher. They currently own $1.6 billion of it, as well as Ferguson, which is a building company. In terms of tech, we got George Soros buying some AMD, Nvidia, Microsoft, Amazon, all the big players in tech. We got David Tupper buying some Meta, all the big players here as well. More interestingly, buying quite a large position in BABA. I think there's quite a bit of risk there. And then finishing up, we have Michael Burry. We talked about his puts already. He bought a lot of puts on the overall market, but he did buy some BABA as well as JD.com. Again, I think BABA has quite a bit of risk, specifically with China and their economy, as well as just the risk with the Chinese government. Then you have Scion here buying a lot of the QQQ on the most recent downturn. And at the same time, they did buy some puts on the NASDAQ as well as the Russell. Moving over to investors' expectations of cuts. They mention here cuts come for two reasons: to avoid recession or to normalize its monetary policy. And they have not really talked about cuts at all. We've been hearing higher for longer for quite a long time. And so far, the economy has been quite strong. We've talked about it many times. But at some point, the economy is going to slow down, and the Fed will need to bolster it at some point. So the question is, when are they going to start cutting? And looking at the dot plot here, you can see out to 2025, we're expecting a median range around 3.25% to 3.5% based on their dot plot. Next year, they're looking at cuts down to around 4.25% up to maybe 5%, which would be a couple of cuts from current levels. And you can see here, no cuts and potentially one or two hikes yet to come this year. Just to give you some perspective, and then longer term, they're looking at 2.5% without any specified year on that projection. In terms of looking at historical rate hike and cut cycles, typically there's around 4.5 months between the last hike and the first cut. And in my opinion, we haven't seen the last hike yet for this year. So when we do get another hike, you can look for that 5.5 month period. And you can see there's a little bit of variation in here, but that's the current level of expectation. So looking at this from the opportunity perspective, let's take a look at a couple of scenarios. If we get that higher for longer, staying at current levels through March, that's obviously not going to be very good for anyone. I don't think equities would go much higher, and I do think bonds would suffer in that case. Probably see some other banks starting to go bankrupt. In terms of the baseline, you can see that normalized cut that we have been talking about. I do think that's certainly possible. And then you have a potential growth scare, a little bit weaker economy, shallow recession. And then if you get that full-blown recession case, that's obviously going to be super bearish for markets. But there would be some opportunity in bonds which would benefit from those rate cuts, as well as gold. Moving over to the Fear and Greed Index, you can see we have actually dropped out of greed for the first time in a very long time. 1 month ago, we were at extreme greed at 83. Now we're all the way down to 46, almost at the bottom of neutral, almost moving into fear. Market momentum still in greed. RSI overall still in greed. Breadth absolutely has dropped down. And we talked about this in the Friday video, and I'll touch on it again in this one. Breadth is in an area where we might see some reversals. Put call ratio, extreme fear, definitely true. We've been seeing a lot of puts entering the market, definitely interesting. And we'll look at that on Max Pain as well. Volatility index, it says extreme fear. I don't know if that's exactly true. You can see we're up here around 17, and we've been higher than that for a long time. It is recently higher than what we have been seeing throughout most of June. You can see this kind of trend above the moving average, which is interesting, but definitely more fearful than what we have been seeing. And then extreme fear here also in safe haven demand, but junk bond market still showing extreme greed. This is the ratio between junk bonds and investment grade bonds. And I just don't think this has really priced in the higher for longer mantra that the Fed has been talking about. Moving over to the economic calendar, nothing on Monday, basically nothing here on Tuesday. Existing home sales, fairly interesting. Moving over to Wednesday, we have global services PMI at 9:45 Eastern, also interesting. New home sales for July at 10 o'clock. Thursday, durable goods orders at 8:30, and then initial jobless claims like always. And then on Friday, we have consumer expectations and inflation from Michigan University. And then we have Jerome Powell speaking at 10:05. That's going to be interesting. I'm sure that'll move markets at least a little bit. Moving over to earnings for next week, we have Zoom on Monday, Lowe's on Tuesday, as well as Medtronic. Nvidia, that's going to be the big one for Wednesday, along with Autodesk, fairly interesting. Thursday, you have Intuit, as well as Dollar Tree, Ulta Beauty. Then you have Marvell here on Friday. Moving over to Max Pain for the Friday expiration, you can see very few options, just under 1 million. Put call ratio, however, super high at 3.01. That's the highest we've seen in a long time, even higher than last week. And you can see those two big put walls here at 425 as well as 436. And look how few calls there are in the market. Decent put levels here at 440 and 442. Also interesting. You almost have to expect that markets are going to rally a little bit based on this, as well as Max Pain sitting up at 443, which is about 2% higher than current stock price. Everything here on Max Pain says we're going to see at least a little bit of a rally going into the end of next week. Moving over to the charts, starting off with the S&Ps here on the weekly chart, you can see 3 weeks in a row of downward price action. We did not quite hit that 21 EMA, sitting at 43.06, but look at these trend lines. You can see the one from the bottom of the lows here in October, marking the bottom here in March, grinded along this level here in May, and once again, we are at this level very clearly, stopped there at the end of the week. Looking at this other trend line here, marking the bottoms in May, marks the tops here in November as well as January. We are at that level once again also, so a little bit of confluence between these trend lines, fairly interesting. But looking at momentum, you can see 3 consistent steps down, looking to cross in next week if we don't get a bounce. And we absolutely could. It would not shock me if we saw a little bit of a pullback and then we got the continuation. I do think this is going to continue lower at some point, potentially getting all the way down into this 4,200 area, back at this longer term trend line, certainly possible, but it is a little bit extended in the shorter term. Moving over to the daily chart just for a moment, you can see this downtrend that we were watching. Momentum super bearish. RSI not quite oversold, but it was getting there. It hit this level at 435.88, overthrew it by a lot, and then finished just slightly positive on the day on the Friday session. Almost looks like an island reversal type setup. Gap down. If it had paused, you could have looked for the gap higher, but in this case, we gapped down, rallied into that Max Pain area, just at that highly traded zone here, holding just barely above it. And like I said, it would not surprise me if we got at least a little bit of a retracement. Moving over to the NASDAQ on the weekly, very similar to the SPY. You can see we're not quite at that 21 yet. That's currently sitting at 14,346. We did get bearish momentum here, which is interesting. Weekly RSI obviously breaking down dramatically, but it is at this trend line that marks the bottoms here in October. We did grind on this level before we had that bigger pop up to that most recent high. We ended up topping out here just at the bottom of this consolidation, which was the consolidation of the all-time high before we had that bigger breakdown Again, would not be surprising if we got a little bit of a bounce off of that trend line, 3 weeks in a row of bigger downward price action. Similar to what we saw here in the August dip, 3 weeks in a row, one bullish week, hit that 21, then we get another continuation. I am expecting a continuation, but it does seem a little extended. Moving over to the daily chart, still very similar to the S&Ps. Wasn't positive on the Friday session, but very close, down 0.13%. Big bearish momentum, RSI obviously bearish. You can see these longer term trend lines, definitely interesting. This closest trend line is the one that marks the top going back to 1 February. And then that same level correlates with the bottoms here from 15 June, as well as July 5th and July 12th. So looking at that level, you can see I have another horizontal level just above that at 353.24. Again, would not surprise me if we got a little bit of follow through, a move back into this range up around 365 to 367. That would be interesting. And then we get a bigger continuation lower. Moving over to the Russell, you can see on the weekly chart, we did throw a wick through that 55 EMA as well as the 21 down at 182.80 and 182.29. And then we rejected from that level. Momentum and RSI, very similar, continuing to move bearish. But an interesting level, 183.28 is my horizontal level. So overthrew that, hit those longer term EMAs, rejected a little bit at the end of the week. Definitely interesting, and in my opinion, setting up a very similar move. Again, you can see that move here from the August high. 3 weeks in a row, big bullish week, continuation 2 weeks. It does seem like a similar setup. Looking at the daily chart, you can see it does look a little bit more bullish after hitting that 144 and the 200 SMA. Momentum stepped down. RSI didn't quite hit oversold conditions, but I bet that it did once we had that gap down, hit that oversold, and then bounced with the rally. Again, looks like we're going to see a little bit of a move higher in my opinion. Moving over to the Dow on the weekly, you can see we consolidated for 3 weeks and then we had that big breakdown here. Moving down to the tops of this consolidation from June. We also hit VWAP at 343.99, definitely an interesting area. Momentum and RSI, same as everything else. Overall, the Dow is not as oversold because we've really only had 1 week of selling, but that also means that the structure here on the weekly chart is a little bit more bullish, and we're not even close to that 21 EMA, which is sitting all the way down at 340.94. And looking at the daily chart just for a moment, you can see that gap down ended up being slightly bullish, 0.02% on the Friday session. Again, if we saw a little bit of a rally, maybe up to 350, 350.92, something in this area up here, would not be surprising. Again, looking for that continuation down. Realistically, going to test that 200 SMA, currently sitting down at 336.98. Moving over to the equal weighted S&Ps on the weekly. Looking at 3 weeks in a row to the downside, momentum and RSI just about the same. Hit that 144 EMA sitting at 146.21. And it did have a little bit of bullish momentum at the end of the week as well. Highly traded zone sitting at 145.30, definitely interesting. And jumping over to that daily chart just for a moment, you can see here how we came down, hit that 200, bounced, had a slightly bullish day at 0.18%. And that could be a nice start to a little bit of a reversal, looking at 149.82 or potentially all the way up to the 21 EMA sitting at 152.05. Moving over to the ratios, starting off with copper divided by gold, you can see we found a little bit of bullishness on the week, came down into the zone, and then rallied back above my level at 1927. And moving over to the daily chart, you can see what that looks like. We had 2 bullish days in a row after a pretty continuous down move from a consolidation, so it looked pretty bearish. But then we kind of stalled out, found a little bit of momentum moving towards bullish. RSI looking to cross that 50 line in the week to come. Overall, this looks a little bit more bullish, which is interesting. We still need to get above the 21 EMA as well as the 155 on the daily chart. But if this low holds and it is a truly higher low from this previous low, we set up for a higher high, that could be interesting, indicating maybe some bullishness to come in the next week or two. Moving over to NASDAQ SPY and NASDAQ Russell. NASDAQ SPY continuing to break down. The NASDAQ has been weaker than the SPY. Momentum still bearish. NASDAQ Russell, on the other hand, found a little bit of bullishness. The Russell was pretty weak at the end of the week. Hit the 9 EMA just for a moment on the weekly chart, and now we're kind of consolidating at this 788 level. Momentum is still bearish, but RSI flattening out, looking for a retest of that SMA at this point. NASDAQ SPY still looks pretty bearish, looking to come down and hit that 21 EMA at 333. Overall, a little bit less bearish on the NASDAQ than it has looked over the last 2 to 3 weeks. Moving over to the SPX divided by the M2 money supply, you can see we came into this clear resistance that marked the all-time highs as well as the pre-COVID highs, and now we're starting to pull back from that level. We cut through the first level very quickly, took just 3 weeks versus this previous iteration where we chopped for a while and then had the bigger breakdown. We also have the 21 EMA sitting at 2069 just behind this trend line. Certainly could come into that area, find a little bit of support, but it is worth mentioning that momentum is now bearish. RSI breaking down below the SMA, probably going to come down to at least the 50 line. Definitely interesting. But once again, this chart marking another top, and this is definitely one you should watch over time. Moving over to Apple and Tesla, you can see we've had 3 bearish weeks in a row on Apple. Hit that highly traded zone sitting at 172.58. Rejected a little bit, had a slightly bullish Friday, just like everything else. Interesting level though, definitely finding some support. Tesla also found a little bit of support at the 214 level. You can see that also marks the high going back to February. Similarly on Apple, you can see that high from August. We came into that zone and found a little bit of support. So starting to backtest some of the highs, and that is starting to bring in at least a little bit of buying pressure. Looking at momentum, both bearish. RSI, Tesla crossed the 50 line, so this looks more bearish. Apple just barely below the 50 line. Could absolutely bounce at that level, looking for a little bit of a retrace to the upside. Moving over to staples and discretionary. Staples, big move down on the week, makes sense. We're at these previous lows, hit that 72.50 area. We've come into this zone a few times and it's held. We had this overthrow in March, which was interesting, but you have the 144 just below this, just below that level at 72.36. Definitely an interesting level. If this breaks, that would look a lot more bearish. If it holds, we could see another move back into the 75.40 area. That would be interesting. Discretionary, also rolling over 3 weeks in a row. Did not quite hit that 21 down at 159.38, but it did hit my price target at that 162 area. You can see that candle break on the move higher. I expected to get into this zone, which we did. Momentum, not quite bearish, but moving in that direction. And similar with RSI, moving lower, but not quite bearish yet. Moving over to sectors here, you can see oil and gas, energy continue to be the top performers over the last month. Next in line would be healthcare. And basically everything else is pretty negative on the week. Gold being at the bottom of the list as yields continue to go higher. Utilities still pretty far down there. Communication and technology still not doing very well in this most recent downturn. Moving over to breadth on the 50 and the 200, you can see 4 weeks in a row of weakening breadth on both charts. 50-day average getting all the way down into that 30 range. 30 is typically an area where we find some support, especially on these bigger down moves. You can see we went from 92 back into this 30 range. Big bullish week, then the continuation down into this super low area around 2 to 3%. That's typically the furthest that this can go. You can see we've gotten into that range a few times and then we always have a big move higher from that area. So that would be a pretty nice setup if we did get into that range. Definitely interesting and something to watch for. But right now I'm looking for at least a little bit of a pullback, and then I would expect that continuation into a lower range. Similarly here on the 200-day average, we did get that big move down just like we've seen across the board. Would not shock me if we came down, hit that 55 EMA at 48.88, and then had a little bit of a rally back up to that 58.90 to 62 zone, set up a lower high, and then we get a continuation lower into this 36 area. We came into that zone twice before and then had nice little moves higher from that area. Doesn't mean that we absolutely can't go lower. You can see we got there in June of 22, and then of course we have the October low where we rallied pretty strongly into this zone where breadth continued to widen on that rally. But right now, momentum on both bearish, RSI on both bearish. And I do think we'll go lower over the medium term, but looking at least for a shorter term bounce. Moving over to yields just for a moment on the weekly chart, you can see bullishness on the week. A little bit of a rejection on the 2-year, not quite breaking out to new highs yet. 10-year, however, did wick its most recent high from October of 22, and this looks more bullish in my opinion. Momentum still building, not overbought yet. 2-year momentum definitely fading. It's been consolidating in this area for a little bit now. RSI still looks a little bit bullish, but definitely not as bullish as the 10-year. We've been talking about this reversion for a bit now. I do think that is part of the reason we're seeing so much weakness in equities. Moving over to the dollar on the weekly chart, you can see we've had 5 weeks in a row of bullishness. We have found a little bit of rejection at that 103.64 area. That also marked the highs here in June, as well as the high on the week of February 6th, and then some lows here in December of 22. Definitely an interesting area, but momentum is still bullish. RSI crossing above the 50 line on the weekly chart looks good. Could absolutely break out to this next high. Definitely interesting. The daily chart looks a little bit weaker. We talked about that in the Friday video, but the weekly still looks quite good. Moving over to bonds on JNK and TLT. JNK tagged this line here, so I added a trend from the lows in March, marked this low here in July at the beginning of the month, and then here in August, marking that low as well. If this breaks at this point, you'd have to be looking for 89. That does look like the next level of support. TLT, on the other hand, continues to look super bearish as the 10-year continues to go higher for yields. We're now at this low here from October, and if this starts to break down further, that could be quite interesting. TLT really hasn't been much lower than this in its history, and this does look like it's setting up to go lower in my opinion. Not quite oversold yet, bearish momentum, and overall fiscal policy says that treasury yields are going to go higher. Moving over to the VIX on the weekly chart, I just want to highlight this really long-term downtrend line. Marks the high here in March, as well as April, May, June. Marks some highs here in January of this year. Got wicked in May also. Overthrew it pretty strongly in March, but it does mark a lot of tops and bottoms, and you can see we hit that level once again last week. And then we wicked even higher up to this next trend line in that 1850 area. We still did not get above this longer term downtrend line, and if it does hold above that level and start to move higher, that could be a pretty bearish indicator for markets. We're not quite there yet, and like I said, I do expect at least a little bit of a pullback from this level and give equities a little bit of room to rally, but I would overall expect this to continue to break out as we ultimately move lower over the next 2 to 3 weeks. Moving over to my accounts here, you can see I have one put on the IWM at 184 for the Monday session, looking to get into some shares potentially as long as it continues to look a little bit bullish. We talked about how everything looked a little bit more bullish in the Friday session in the Friday video. Similarly here with the Qs, I have a 358 call for $2.20. 2 of those on the covered call position, looking to get around $440 on that credit. Puts, I also have 2 of those at $1.34 each for Tuesday, and then I have some calls to cover that at 364 for 74 cents each. Again, look at that skew. I do have a little bit of bullish bias going into the Tuesday session as well. Overall, everything looked a little bit more bullish on Friday, and like I said, on the charts, everything looks a little extended in my opinion. So slightly bullish bias going into Monday and potentially Tuesday, as long as the shorter term trends continue to hold. Let me know down in the comment section what you thought about the biggest investors and what they are buying, or the current schedule for Fed rate cuts. Are we going to stick to that, or is something going to break sooner? Definitely like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.